Good morning. This is Axel Merk, President and Chief Investment Officer of Merck Investments, with a morning update here. Let me make this brief today, in part because numbers aren't all that thrilling today, but also I have my 25th wedding anniversary today, and I shall look after my bride rather than chatting with you guys. Um, so with that said, we have some things coming out today. Services PMI came out today. They were absolutely dismal. And let me just see whether I can pull them up as I speak here. Um, they were plunging throughout the world and to from reasonable levels to just to 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 crushingly low levels. And I will tweet the chart here in a moment after this call. But if I look around the world, they kind of range from a low of India of 5.4 on the service PMI. Normal kind of break-even level is 50. And the best reading came in Brazil at 27.4. But most of them, if I look at them, so UK was 13.4, and Russia 37, for example, France at 10. So really bad numbers. The talking about France here, the EU gave a forecast for GDP in the EU to come out minus 7.7% this year. Germany faring a little better, I believe, minus 6.8%. Those are forecasts. Um, Talking about forecast, ADP, the payroll company, um, every Wednesday ahead of the official payroll report is coming out with its own estimate. The estimate they're actually publishing is not of the Friday number. What they're estimating is what the Friday number will be revised to. That might be a statistician's detail, but one should keep that in mind. Um, and they're forecasting 20 million job losses. So in the meantime, of course, markets go up and up and up. Except as I talk here, the S&P has dipped into negative territory. The S&P is now minus 3.5 points. The S&P futures. And bonds are strong, but bonds are weaker. Yields are higher. The 10 years at 71 basis points. The 10 year is down 16 ticks. The 30 year is down a full point and 28 ticks. The 3-month Treasury rate, I've been quoting it, is at 11 basis points versus 3-month LIBOR at 50. So the 3-month LIBOR, if you've been following me, has been coming down. And so now the spread is just under 40 basis points. In a quote unquote normal environment, you'd expect that to hover around 25 basis points. So still some stress in the market. Effective Fed funds rate is at 5 basis points. The VIX curve is not inverted today, I see. It's been inverted. Once in a while it's been kind of dipped positive, but hasn't been sustained in a positive area. The VIX is now at 32, so still at high levels. When you're talking about the VIX curve, that's current volatility, the volatility that's priced into the futures markets here. You can trade volatility these days, so it's a bit odd. But all these things are necessary. And well, some of these things are necessary, some are not so much necessary. But you can buy insurance, you can sell insurance. That's how you can think about it, and you can lose a lot of money in these things, which means you don't want to trade most of the stuff. Certainly not the derivatives. But let me just give here, for good order's sake, the disclosure I'd like to show you each day. So if you can please absorb that, so that I have gotten that out of the way. In the G10 space, risk off seems to be the mood of the day. If I were to just look at the top performer, which is the yen, which is up 40 basis points, but right behind it is Australia, and I should say, Australia and New Zealand had better than expected economic data, retail sales notably, but a lot of that includes the hoarding numbers. But New Zealand also had some other numbers that were a little bit better. On the lower end is the sterling, down 64 basis points. Gold is taking a breather today, and the spot gold is minus $12 or 71 basis points at 1694. Let's round that, and the gold futures are at 1697. The futures are down $14. Other than that, if I look at my screen here, the services PMI numbers are out there. Factory orders, all bad. And in the, let me just here see whether there's anything else here to be said about the US that I haven't mentioned. Mortgage applications, yeah, nothing too thrilling here to say. Up 0.1% here it says, but that is about it. That is about it. Markets around the world, European markets are down a tad, exception of the FTSE that's up. Let's keep in mind the sterling is down, so that sometimes happens when the currency goes down. The equity markets have a little bit of a buffer there, but up in the local currency as well. And so the Euro Stoxx 50 is down 60 basis points. The Hong Kong was up 1%, and the CSI index in China was up 60 basis points. So I said I'll keep it brief, so I will stick to that. And with that, have a great day, and talk to you hopefully tomorrow. Take care. Bye.